Hi, I'm Keon, a research analyst with Lipper, and I'm here to speak to you about fund flows activity for the week ended Wednesday, July 1st. Let's start by taking a look at the aggregate flows activity for the week. There was aggregate net outflows of approximately $4.4 billion on the week. This aggregate data includes both mutual fund data and ETF data. The largest outflows amongst this group was equity funds. This saw outflows of $10.9 billion for the week. Equity funds were followed by taxable bond funds, which had outflows of approximately $4.6 billion. Muni bond funds also had outflows. They saw about $1.2 billion leave their coffers. And the only group that took in money on the week was money market funds, which had positive net flows of about $12.2 billion for the week. Let's take a quick look at last week's market activity. On the week, the S&P 500 and the Dow Jones Industrial Average both suffered losses. The S&P retreated about 1.5%, while the Dow was off about 1.2%. The ongoing saga out of Greece weighed heavily into last week's market activity, and it appears it will do so moving forward this week as well. The Dow suffered its worst point loss in 2 years on Monday the 29th, as the talks about the Greece debt repayment plans broke down. The Dow lost over 350 points that day, while the S&P was off 44 points, its largest point drop for the year to date. Let's switch back to fund flows activity now and take a closer look at our macro groups. For the week, equity mutual funds saw $2.4 billion leave their coffers. Taxable bond funds had $2.8 billion leave, and muni bond funds saw $1.2 billion leave as well. Once again, the only group with positive net flows on the week was money market funds, as they took in $12.2 billion. Let's turn our attention now to the equity mutual fund group. Equity funds, as we stated, saw $2.4 billion leave last week. This was the third consecutive week of net outflows and reduced their year-to-date overall positive net flows to $25.3 billion. Breaking out last week's activity a little bit closer, we see non-domestic equity once again had positive net flows. This week a little more muted than recent weeks. They only took in about $300 million. And once again, domestic equity funds saw money leave their coffers this week, about $2.7 billion left. Overall for the year, non-domestic equity funds have taken in $62.7 billion, while domestic equity funds have seen $37.4 billion leave their coffers. Moving on now to the ETF side of equities, we saw $8.5 billion in net outflows for the group for the week, which reduced their overall year-to-date positive net flows to $39.1 billion. In last week's activity, the SPDR S&P 500 ETF saw approximately $6 billion in net outflows, while the iShares Russell 2000 ETF saw about $2.5 billion leave their coffers. On the buy side, the iShares US Real Estate ETF had about $570 million in net inflows. Let's take a look at our taxable bond fund groups now. Starting with the mutual funds, once again, as we said earlier, they had about $2.8 billion in net outflows last week. These outflows reduced the year-to-date performance to $31.1 billion in net inflows. Last week's activity, funds in Lipper's high-yield funds category were responsible for the largest amount of net outflows, with about $1.3 billion. For the year-to-date, this group, they've actually had positive net flows of about $3.2 billion. Overall, for the year-to-date, the largest contributor to the positive net flows for this group has been core bond funds, as they've taken in about $30.9 billion in net new money. Let's move on to the ETF side of taxable bonds now. Overall for the week, we saw net outflows of $1.9 billion for the group. This reduced their year-to-date positive net flows to $18.2 billion. We saw outflows from high-yield products here as well. The iShares iBoxx high-yield corporate ETF saw about $1.1 billion leave, while the SPDR Barclays High Yield Bond ETF had about $500 million leave. On the buy side, the iShares 20-plus years Treasury ETF took in about $470 million in net new money. Let's move on to our muni bond fund group now. Muni bond funds had about $1.2 billion leave their coffers last week. This is the 9th consecutive week of net outflows for the group. during which time they've had about $3.3 billion leave, which reduced their overall year-to-date take to $5.7 billion in net new money for the group. This 9-week streak followed a 16-month streak of consecutive net inflows for the group, during which time they took in about $32 billion. The largest contributor to last week's activity was high-yield muni funds. They saw about $473 million in net outflows last week. This group has also been the main contributor over the 9-week streak, with $1.5 billion altogether in net outflows. Let's move on to our last category now, money market funds. Overall, as we stated earlier, the group took in $12.2 billion in net new money, which reduced their year-to-date net outflows to about $116.5 billion. The largest contributor to last week's activity was institutional money markets, which had net inflows of just over $13 billion. Well, that wraps up this week's report. If you'd like to take a closer look at the data, please join us at our website, www.lipperusfundflows.com. And please join us here again next week, where another analyst will be speaking to you about the week's fund flows activity.